Welcome back from the break. We just did a little instruction with the tech guys that they should ring the bell again for everyone to note that we'll continue. And we'll continue with the second last panel of today. It's a panel discussion on a vision of Europe in 2030. The digital money stack, that's to name the full title. It will be hosted and moderated by DEA's very own managing director, Conrad Kraft, who amazingly again took the long way to join us today. So please giving a thundering round of applause. And dear panelists, please also join the stage already. The microphones are turned on.
There we go.
And
thank you for
hand
that
over.
Warm welcome and hi. It's a pleasure to be here again, discussing a very important and visionary topic with visionaries that we've assembled that are well equipped and experienced to discuss this topic. The digital money Avengers, so to speak, I would like to call them. But it's quite an important topic that we're going to discuss today. It's really about a gaze into the future about what digital money might look like in Europe. We do know that there's many forms that are currently competing for our hearts and wallets, and they are going to perhaps give us a better insight into what the future might look like from the digital money stack as it evolves and continues to evolve quite rapidly across the globe, but in particular in Europe. So with my luminaries before me here today, I'm happy to take us through this topic in a very systematic fashion, but also a very creative one, because of course we are looking into the future. Who knows what 12 months down the line looks like? But we will nonetheless attempt this task. But before I do so, I'd like to give each of my panelists a chance to introduce themselves, perhaps starting to my immediate left. Marika, please, after you.
Hi, very nice to be here. Thank you for the intro. I like the term Avengers of Euro for 2030. That's really cool. Maric Flamand, I'm actually on the supervisory board of Kivalis and on the board of a few other companies. I do advisory work. I also write a newsletter called Currency of Power, where I look at geopolitics, digital assets, and what might actually be happening in the world that we're living in. I'm a former crypto and bank exec. I won't name the names in the company I've been in, but yeah, I've been deep in the space for quite some time.
So thank you very much for having me here. I'm not sure I'm one Avengers, but for sure I am surrounded by Avengers there. It's very great to be surrounded by such people. I'm Thibaut Pellet, I'm working at Worldline, and I'm heading the virtual asset and tokenized payment. So very much looking at the whole stablecoin stack and which offer from the PSP perspective, issuing and acquiring side, and also at the digital euro level and what we could bring.
So my name is Stefan Ludwig. I'm from Deutsche Bundesbank. I'm leading the team for the architecture and implementation of the digital euro service platform, so the main components for the digital euro, for the retail digital euro. And I'm in this project since around 4 years.
And my name is Ulrich Binzheil. I was at the ECB the last years on payment and market infrastructures. And I left the ECB in June last year, and now I'm a professor, essentially.
Great, nice transitions. Well, maybe perhaps staying with you, Ulrich, let's jump straight into the question. The digital money stack in 2030, what does it look like? You've published some recent work about how certain actors influence the public narrative around retail infrastructure and payments and the like. What do you think the digital money stack might look like? What will it comprise of? What do you think which parts of the debates are neglected, are distorted. Give it to us.
Yeah, no, exactly. If you speak about the future and where this industry will be in 5 years' time, the debate is, of course, very confusing, and it's confusing for a number of reasons. I mean, the fundamental economic reason is that this is a network industry, you know, and in network industries, you know, there are multiple industry equilibria possible. So, you know, there's always at the end market concentration with some solutions, some providers dominating the scene and potentially generating a lot of money. And yeah, there are lots of past dependencies, and if you have multiple equilibria, by influencing, you know, views, you can steer where you go, no? So if I have a product, I will say, of course, this product will prevail in 2030, because then I may convince people to look at it and to, you know, kick them into into achieving the network effects and using my product. So that leads to a normally confusing debate. There are two other problems. One problem is the correlation of expertise and vested interest. It's a very technical industry, and those who know it, who really understand, are those who work deeply in it for a company, and they're not paid, you know, to say the truth. And those, you know, us in central banks, we have some good half knowledge maybe, or regulators have maybe a good, I don't know, less than half knowledge. So that makes it also difficult. Then there is another correlation, which is a negative correlation, typically between whether your product is in the money or out of the money. So if you have an out of the money product, you will make a lot of noise about it, no? Because the only chance to bring it back is to exaggerate and to make people look at it. While if you have a good product, which likely will come or is successful, maybe you don't want to talk about it because you don't want others to look at it. Or if you are, you know, a super now profitable company like Apple and Apple Pay, you don't want to attract scrutiny from regulators, you know. So there's a negative correlation between noise made and maybe promising, not always, but that's another problem. And then all this, of course, leads that it's also to the fact that it's this highly regulated industry where, like everywhere in finance, not everywhere, but in many parts of finance those days, regulatory changes can make the difference, you know, for where the industry ends. So you have heavy incentives to work on public opinion and on legislators. And again, you know, those people who have the firepower also to do so are typically the incumbents with a lot of money. So I think this debate is always confusing. And then you asked, where do we go? So we cannot find the answer in the public discourse. We have to think carefully ourselves. And yeah, but I think there's consensus that a lot is ongoing, that in 2030 things will look different. And big questions, digital euro conference, will the digital euro have gone live? Will it be successfully deployed? How many users will it have? That's one big question, and I would answer it still positively. I want that this network effect, and here the public sector has advantages to reap the network effects, because it can regulate, you know, it can have mandatory acceptance. And then, of course, all the crypto and blockchain things will also happen, I'm confident.
Okay, interesting. Maybe talking to the public sector directly, from an implementation perspective, what sort of stack do you think is necessary to, you know, see the future stack actually come to fruition, so to speak? What has your experience been, Stefan?
So you ask about pros and cons, and I think there are a lot of difficult things we still have to manage. And if we are looking to the future, I think a lot of things will get managed. I'd like to have one example is the open standards. Yeah, so if we are a couple of years ago, we were sitting at the ECB and thought about like how to get a rule book, really a rule book to compare the new rule book that is developed by the ECB, to just take a comparison. And all these were pretty private. Yeah? And on the other side, if you look at this a European digital identity, for example, if you know the project, yeah, they have a website where everybody can have a look at the details of the plannings. Yeah? It's not that the code is exposed and the technical details, but to have this common interaction. Yeah? I think this is really a good sign, and I think for the digital euro we will go into this direction. Yeah, this is a good, positive thing. And I think a big problem is what I have not heard today at the moment is about fraud protection and detection. We know that this is a big topic as soon as a payment instrument is live. Yeah, there will be fraud. It's definitely true. Yeah. And because this digital euro, I'm talking about the retail digital euro, yeah, this is not at the balance sheet of the banks. Yeah, it's a European thing. It's owned by yourself. And on the other side, we don't have the possibility at the moment, because privacy is first, to have a really fraud protection. So we are in the middle, and who is taking care of the customers? And I think we have the customers who said privacy is the first point, and we want to have privacy in the digital euro. I think as soon as this is live, and as soon as we get the first fraud cases, yeah, they will decide, okay, I want to be protected. I want to be protected. It doesn't matter what information do I have to share with others. So, yeah, I think we will evolve in the future.
So an evolving stack. So what I'm hearing is identity is one part of the stack. Fraud detection is another. Of course, we know about the political discourse and regulation and what we've mentioned there. Marika, maybe over to you. Is what you've heard complete in terms of what you envision as a stack for 2030 in Europe? Or do you think that there's something that's missing, or many things that are missing? From the private sector perspective, perhaps, what do you think?
So I think it's a different way to think about it. But the way I think about it for what will the future of money look like for Europe is two angles. One is actually, what does the world look like in 2030? And I think, imagining a world where real-world assets are tokenized and they float around very differently, that's definitely the direction we're taking in. The other part is actually an AI agentic world. I think that's another thing that, given the speed at which things are going, I think it's another thing to imagine that. So on one hand, it's like, let's imagine what just the future looks like. And then the second part of the question for me when I think about what could be the future money stack is actually, what's the role of the euro? And what do we want the euro to play as a role within that? And I think within that, very often we tend to think like within Europe, we don't need anything because we actually have already very good payment rails. That's true. But I think the real question is, what role do we want the euro to play on the international scene? And therefore, what's the stack we need for the role we want to play on the international scene, knowing that the world is going to be tokenized, whether it's through AI agents, whether it's real-world asset tokenization, and so on and so forth. So that's that. And I think, it's also fair to recognize our origins as Europeans. The euro is not the dollar. We've been actually unified with the euro, and politically that's what actually unites us. And I think when you think of it that way, we're still a very fragmented market. We have, fragmented bonds market. We have actually very different cultures and very different economies and so on and so forth. And that means actually the way we construct this digital stack for the future we want to envision, which I'd hope is actually a very strong euro also on the international scene, needs to take all of that into account. And so when I look at all of that, actually I think a way to build a tokenized money stack is to think, we need a wholesale CBDC, because actually we are in a place that if we don't have something that anchors us, commonly, then we might actually be fragmented. And slight parallel on that, but when I see today many different jurisdictions building their own stablecoins, I'm worried, because it means we might have a French stablecoin and a German stablecoin, I'll let you decide which one you think is better. I'm French, no judgment. But I think we might get into that place, right? And then we might actually fracture the euro. So let's say we need a wholesale CBDC to actually anchor us and have actually this last lender of resort that is the role of the ECB. I think within that, then there is very often, and you framed it, debates around, is it CBDC, is it tokenized deposit, is it actually stablecoin, is it digital euro? To that, I would say, depending on the users, it might be a different form, right? And I think we heard from Tony earlier, like actually, all of that is multi-issuer, multi-acceptance. In the end, it will not really matter. It's just like, who's the end user of all of that? Again, it's just tokenized money. It might be different form, might do different things, might be programmed slightly differently. And so if you build the stack from, bottom up, wholesale CBDC, it anchors us. Tokenized deposit might be helpful for banks to do big transaction to big transaction. I think stablecoin have a huge role to play, in particular if we want to have a role internationally and if we want to have a role in the AI agentic commerce. Otherwise, we might not exist as euro players. And I think, other forms of money could also evolve within that, right? So I think that's really, I've learned stuff here listening how other panelists think about it, but that's the way I try to think of like, what could it look like? And therefore, what do we build? But it starts from a vision. We need a vision for what do we want the euro to be, what role would we want to play, and what does the world will look like tomorrow?
Yeah, quite comprehensive and well thought out answer, I would say. Of course, it's the digital money stack won't exist in a vacuum. It'll exist in a context. And I think that's a very important place to start. Like, what do we envision Europe looking like in 2030? And then what stack would facilitate whatever vision we have? So there's a couple of things I want to come back to there, but I just want to go to Tybalt in a second. What's one layer, perhaps, of the many that have been mentioned here right now, Tybalt, that most people think will come together organically or will somehow evolve by itself, but probably won't, and will require deliberate, action and intervention from all actors or certain actors.
Yeah, maybe just before answering, because I really like what you just said, actually, and I believe it goes also with the paper you released recently. Like, there is no unique answer. There is a stack with different form of money for different use cases. Whether it's the settlement of tokenized asset, whether it's cross-border, as you said, and we could go up to the pyramid, up to the retail as well. And I believe this is important that really we understand that as a player in the industry, that the world of tomorrow will be, we could say in a sense, more fragmented, but I would say different stack for different use cases. And I really believe that we should not try to put, square in circles. No, that's so I wanted to come back on this because I feel it's very, very relevant. To this point, and it was addressed a bit also, for me, to your question, the end consumer is very important, and my concern is that we might lose the end consumers, because here we are all experts, but if you try to talk about the money stack to your parents or someone not in the industry, trust me, they don't even know what is the difference between commercial money and central bank money. So when you start to say to them, no, but trust me, you have money on Stellar and you have money on Polygon and you have stablecoin, but you have EURC and EURD and EURO and EURCV and EURI. Let's make the experience and you will see. So for me, there is, of course, a question of interoperability. This was the one I wanted to bring. Because the interoperability, we tend to see it, I would say, quite a lot from the different schemes, of course. So moving from one part of the stack to the other, which is important. There is also the interoperability between the blockchain, if you look at the stablecoin, which more and more we see on the market, and I would say almost it has been tackled, especially with the issuers, etc. So that's a good thing. Still, there is one link for me which is missing on the stablecoin part, which is the interoperability between the token itself, where I feel it's all still quite a struggle, because you have the issuing, what you call the issuing PSP, so the one issuing the stablecoin, and you have what you call the distributing, a bit similar actually to the digital euro, we could say. Not all the banks will issue the stablecoin, but at some point, I believe there will be some convergence, just like we've seen in the in the age of internet. And we will need to tackle this issue of the interoperability between the token itself. So we make sure a stablecoin is a stablecoin in the stack, and we don't need to understand EURCV, EURC, blah, 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 blah. I've already done the list.
Yeah, so it's becoming more complex now. So there's multiple stacks for multiple use cases in multiple versions of the future, right? So it's really starting to sound a bit sci-fi-like. But nonetheless, I think I want to stay on the topic of interoperability or perhaps coexistence. So we often hear about the fact that different types of private and public money are going to coexist for different potential use cases, etc., etc. So I wanted to ask, by 2030, is Europe's digital money future really about coexistence between public and private forms of money, or increasingly about how public, private, and other tokenized market infrastructure, how they interoperate? Because we heard about Appia and Pontus earlier today. You were talking about the anchor. So is it more about the fact that the public sector is going to play one particular role in the stack, and then everyone else plays on top of that, or is the public sector going to take a more leading role than we initially anticipated, especially around discussions around strategic autonomy, etc., etc.? That's an open question, but I'll start maybe again with the public sector or previous public sector parts of the Avengers.
Yeah, the public sector should care. I mean, the public sector takes two forms maybe in this business. One as regulator, and then as operator, and both functions are very important and are assumed. And in the old world, they have shaped this industry, which is in a certain way in between regulation and central bank money, everything that develops in between. And in the new world, this has to emerge exactly. Of course, as regulator, the public sector has appeared through MiCA, which is a bit a strange regulation, of course. And then also it appears now as ECB going into wholesale central bank money, somehow associated with DLT. So the public sector is moving, and that's what it should do. In digital euro, one could say the public sector also moves with technology as everybody else has been moving, just already starting 50 years ago. Then, of course, the public sector, some in the industry tell to the euro system, are you crazy? I mean, how can you do that? Move into electronic. If we have done that, that's enough, But I think the public sector is very relevant in this, and I mean, both regulation and public supply are well justified in this industry. So both should be transposed also into new forms of money, including the front end, the instrument, the wallet.
Okay. Anything to add, Stefan?
I would like to refer to your comment at the beginning. I think there are so many players in the market, and I still see this that it will not work if we get thousands of tens of thousands of different stable coins from the US in Europe. I'm not quite sure who is then taking care of this one and who is paying for that one. I think it's this payment product is an alliance of many different parties, and therefore I think it's at least a good role that there is a central body, which at the moment is the EU Commission or the ECB, who is orchestrating it. It's not that they implement everything or do everything, but they are orchestrating it. I think this is necessary in this really diverse payment market.
Okay, maybe something to Marika, and maybe a bit of a curveball. But if you were sitting inside of a commercial bank at this point, and you were enlisted as being part of looking into the future for 2030, what would you need in order to lean into the future of digital money and to position yourself as a front runner in this stack in 2030?
And I think that's a very good point, because actually what's happening with all those technologies, sometimes you need to fast forward and think what could the world look like, right? And when you actually think from within a bank, what's your duty as a bank? It's to serve your customers, to make sure your balance sheet is solid, to make sure you have profits and not too many losses and so on and so forth. And therefore, that's why it's also sometimes very difficult to innovate in something that might actually cannibalize you. And stablecoins are a perfect example of that. In a way, if you are sitting today in a bank and you look at stablecoins, you might be a bit fearful, right? You might think like, oh my God, this is actually going to take away our deposit. To which I would say, flip it. Don't look it that way, but actually think of what is it that you should build to actually participate in that world. And what does the bank of tomorrow look like? And the bank of tomorrow might look a bit different, right? The bank of tomorrow might indeed be a wallet, and actually, tomorrow, and that might empower better users, right? Which means as a user, I can hold digital asset in a wallet, and then I can choose different sub-services where I get my credits and my loans, and I can have actually more granularity that I can into what I can do, admitting that there's good UX for that. But that's actually possible. And if you stretch that world, then maybe, yes, maybe banks become actually more narrow banks, and it means that we are less in a fractional banking system as we are today. Is it a bad thing? I'm not sure it's necessarily a bad thing, right? But it means that the role is changing. And so I think it's like thinking that way to start, innovating, to not be caught off guard. Because it reminds me in my days when I was in a very large UK bank, and at the time, my role was to actually create from the ground up a digital neobank. What I was hearing every day was, oh no, those digital neobanks, they'll never make it. They'll never be regulated. They'll never have enough customers. Get what? Revolut just had a banking license, and there were 75 billion. And they have hundreds of millions of customers. Not hundreds yet, but it's coming up, right? So I think you cannot ignore what's happening. You also cannot ignore the pace at which things are happening. And so that's very important. And maybe to close the loop on this, private-public debate, I think actually that's where the private sector is good at innovating. The private sector is good at taking risk, imagining a better future, and a future that looks different. And the public sector role is actually to make sure that it doesn't blow up while the private sector is trying to do all of that. So those are roles that in an ideal world are complementary and come together. Another big difference is that very often we underestimate that the public sector is very regional. We think as Europeans, we think as people from our own countries. The private sector is actually very often cross-border. And so we'll have also a different mindset on that, which actually come at a different angle. And it matters in the context of the future money stack, because today, and back to what I was trying to say at the beginning, it starts with a vision for what do we want the money of the future to look like. And actually, I think for once, that vision cannot come from the private sector. That vision at the sovereign level has to come from the public sector, imagining actually a technological shift that's happening within that.
Yep, well-rounded answer again. But that also leads me to maybe Tybalt. If we're looking into the future of the future user of money, what do you think has to be true for digital money to feel normal? Because we heard earlier that it must be digital money has to be integrated into people's habits. I think it was Jan from MSG that said that. What needs to be true for digital money to feel normal in real-world payments, not just pilots, etc. So we're talking about the customer now. What exploration do you have for the 2030 version of the users?
I would say very simply that we stop calling it digital money and we just start to call it money. I mean, we don't care, it's digital money. And that's a bit the paradox. I mean, if you take the stablecoin, that's a bit the paradox of stablecoin that I explained sometime. I said the stablecoin will succeed when the stablecoin will disappear. I mean, as a consumer, once again, here we are all experts. But as a consumer, do you know, commercial money, central bank money? No. If it's going through TIPS, CSM, well, no. So my point, and I will be very brief on that, it will work when we stop calling it digital money and act just like if it was a new money. No, it's just new channels new networks, as you said, on which the money is being used. But and again, the money is not the end. The money is to do something. It's not the end. So it will disappear, I would say, when we stop talking about digital money and we just talk about the use case, the value proposition, and why would you need to pay, and to make sure that you can make those payments with the right form of money. But as a consumer, actually, you don't care. Transparency, yes.
So money is just money, basically. And it's increasingly digital, but it will just be money, right? So I just want to touch on something very briefly, and this is a precursor to the next panel, in fact. And I'm getting some beady-looking eyes from my colleague up there, not to steal her shine. But strategic autonomy is on the lips of everybody, especially due to recent current events. How do we make money, or let's say the strategic role of the euro sovereign or resilient in these times, right? So strategic autonomy, how do we achieve that? How do we make that concrete? What does that actually mean in practice? I think I'll put that to everybody. Let's start with Ulrich, if that's okay.
We live in a world which is not getting better, in the sense that the rule of law, international law, democracy is all going a bit down. And Europe has not been on the side of those who improve their global power, quite the opposite. We become more and more dependent, including in the fields of payments, and therefore we should not give ourselves up, no. That would be too early. We should really, fight for that also in the area of money. And I would see, two immediate things. One is obviously the digital euro, which we should now, push through, make a meaningful digital euro, not one which is undermined by industry lobbying. So it's very important that the legislation is finished now soon in a meaningful way, and not in the way of the Navarrete proposal. Then we should, forget it, because that is just an attempt to derail digital euro. So that, and then the other thing is, maybe we should look at MiCA again. We are all very excited about stablecoins, US stablecoins, and we should ask ourselves, why? That was mentioned in the previous panel. Why is the share of European stablecoins, MiCA compliant stablecoins, so low? And I think here, once more, Europe has thought a lot about regulations. We were the first, we have regulated. There's a sort of Laffer curve in regulation. Laffer curve is taxation. You increase taxes, your income goes up, but if you increase them further, it goes down. If you have 100% tax, you have zero income normally, because nobody will work. And in, I think, digital infrastructure and asset regulation, this Laffer curve is one where you cannot, if you regulate too much very quickly, your regulation becomes irrelevant, because there will be no products under this regulation, because it's a very competitive global space, no? So, for example, the debate around remuneration of stablecoins, if in the US there is under Genius Act question mark, we will see. But if there's some form of remuneration possible and not under MiCA, okay, too bad. There will be no large-scale MiCA compliant stablecoins. Even if you are convinced that you are on the right foot, you will not have positively impacted the world with your regulation. So I would say, let's be pragmatic and give European stablecoins a chance, not start worrying. They don't exist, but we worry heavily about financial stability implications. Let's do it the other way around. They have to become a bit bigger before they can do harm. So let's revisit MiCA, and it's easy, I think, to find a few things there which would make a difference if we relax them in the interest of our impact and strategic autonomy.
Okay. Oh, this is got a round of applause there. Oh, one applause at least. I'm not sure what that was for. Was it for Mika or was it for Navarrete? Okay. Oh, okay, cool. Anything from your side, Stefan? Sorry, we are running out of time slightly, but I'd also just like to remind everyone to please send their questions through if there are any already. Stefan?
Yeah, I would like to go a little bit more into the detail of this digital euro. So we are dependent on on large scale companies, but for at least for the retail digital euro, we are thinking about having our own service, our own hardware totally in Europe, own connection lines in Europe. We have to have a software stack on top of this built in Europe, and for example, for the coding part, also sometimes not seen because there are a lot of other products already there that we could use and just integrate, but we really code everything by ourselves, which is really good. However, everybody of you know that there is a lot of different layers in the ground that is not available from European markets, because other markets, and especially the US market, is way ahead. And there are only, if you're thinking about mobile phones, there are two providers. We have to use them. We can't go around. But we want to make it secure, and for sure, as I told you about these different layers, as soon as there is a possibility, we would try to integrate those pieces such that we can exchange them for a European solution if there is one.
Okay, Tybalt, maybe.
Yeah, I will try to be very brief. For me, two things. The first one is a vision. I really feel that's what is missing in Europe and even in our mindset. A concrete example, for instance, the question for the stablecoin is, and we have it those days, is not, okay, how do I put stablecoin, for instance, the payout? How do I do stablecoin payout? Which merchant is interested, etc., etc. The question is already a level deeper. What would they do with that stablecoin? And I have the feeling that sometimes we lack vision, so we are trying to be reactive, and we just say, okay, stablecoin, so we make payouts, but you don't even know why, and you don't even know what the value it will bring. So for me, that's the first one, is really a vision, because when you have the vision, you have the value behind. And the second thing is just do better products. I believe, we cannot hide behind the sovereignty. Why do people are using an iPhone or some electric cars from China now, etc.? Just because they are building better products. So a consumer, they won't use a product because it's regulated, it's cool, or because it's sovereign. No, they will use a product because it's better. And I think in the Europe, sometimes we are a bit too reactive, and it goes with the lack of vision. But we should not try to be more sovereign just by the regulation, but also by building products that the consumers actually want to use.
Great point, and that was, maybe Marika.
Yeah, so geopolitics. We're being squashed, and it's wartime. The US basically is trying to replace the petrodollar and has a very clear view that stablecoins can actually enable to do that, and that stablecoins can continue to enable dollarization of the world in a very, very, very powerful manner. Just one small example, when Facebook announced that they're doing an RFP to integrate stable coins that potentially can touch 4 billion people, we're not talking about Libra, DM creating their own, they understood that they should not do that. They will distribute whatever is out there. And today what is out there is dollars. So that's the vision of the US, very clear, need to replace the petrodollar, and for that, nothing better than stable coins or crypto dollar. The vision from China is equally very compelling and actually stands from sovereignty. They understand that if they don't have a parallel system that they can control, then they're going to be at the mercy and the control of the Americans. And we're in between. And so we have in our hands the duty to do something, to do it very fast because things are moving, and to basically act to make sure that we don't end up squashed. Because the biggest risk is that yes, it is technical. Yes, it is complicated. But it's not that complicated. And actually, we have a ton of talent, and we have a ton of people who have the willingness and the will to do things. But we need to believe that we can do it, and we need to have a vision, and we need to really want to participate for tomorrow's future, which I think will be probably more the panel after. But it's urgent.
Definitely. I think there's a good round and a holistic answer to that question. In fact, we just have a minute left, if I'm not mistaken, Mr. MC. Can we maybe take a round of questions? I think that we did have a good look at what the stack in 2030 looks like. It's anyone's guess, but certainly centered around a blend of public and private money, reformed regulation and the ways in which we bring these products to bear. Somewhat homegrown solutions, but then also a vision for the future in terms of locally grown good products as well, because people are not just going to use it simply because it's homegrown, so to speak. And then, of course, understanding our positioning globally. So that's also very important. Do we have any questions that we could take from the audience? Nothing at the moment? We do have.
So first of all, thank you all to the panelists. It was a very cool discussion. I have one question to come back to the very last point that was made about better products. My question is very simple. What would a better product look like come 2030, considering all of the things that you just mentioned?
Yeah. This one is tough. No, but better product for me comes from understanding the issue and trying to find a solution to an issue and not an issue to a solution. And for me, it's really in this way. So it's, to be concrete, more discussion with the client coming from the issue and not from the stablecoin, for instance. Okay, we have stablecoin, what do we do? Okay, but what is your issue and how we can solve it? Maybe it's stablecoin, maybe it's tokenized deposit, maybe it's digital euro, we don't know. But really talking with the client and the expert, but really from the issue. It's quite basics, I would say. It's not rocket science, my answer. But the truth is, I have the feeling on the market, we're not doing that much.
Yeah. I think we often today, like, money is just money, right? So we're making all those complex things, but actually when I go and I pay my bread, it doesn't matter what is underneath it. And today we already deal with a lot of complexity behind money, but we've simplified it. I think that's exactly the same thing that it needs to happen. And to your point, which I really liked, was like stablecoins and all of that will win when we stop talking about it. It's just like a euro is a euro, a dollar is a dollar, if the euro still exists. But yeah.
Well,
the Avengers are optimists.
Yeah. On that note, I'd just like to thank everybody for their inputs, great insights, and feel free to take the discussion offline. And yeah, we get one more panel before we round out the day. And thank you very much to everyone for joining us today.
Yeah, thank you, dear panelists. I'm always amazed at how high the quality is still late in the day. I think we can be really proud of that. And I am also very certain that this is true for the very last panel of today.